So, ladies and gentlemen, welcome back to the Moonshot NFT Podcast. I'm your host, Elliott, joined by my wonderful co-host, Matthew. And you'll notice today we have a very special guest joining us on the sofa, the one and only Mr. Siam Kidd.
The casting couch.
Siam, I'll come to you first. How you doing?
I'm good. Thanks for having me.
It's a pleasure. Thank you for making the trip down.
That's good. It's good to leave the home now again.
Always good to get out. And Matt, great to be reunited in the flesh once again.
As always, yeah, back in person and much better than the remote ones that we've been doing. But yeah, nice to have a guest for the first time. So this is cool.
Exactly.
Interested to see where we go with this conversation.
I'm so going to disappoint.
So we've been really looking forward to this because any of our listeners following us on the Moonshot NFT podcast will know that, of course, myself and Matt are very pro NFT people. We're big fans of NFTs and kind of have been over the last few months. And we were very keen to get Siam on as our kind of inaugural guest, really to present what I think will be a very interesting case as to why he kind of hates NFTs at the moment, but also sees a whole lot of potential of them in the future. And I think it's going to be quite an eye-opening and informative discussion that brings across some very, very useful viewpoints. So we're really looking forward to diving in. But before we do so, Siam, I've had the pleasure of getting to know you over the last couple of years, really. But for our wonderful audience who might not be as lucky as me, if you could give a brief little introduction as to who you are.
I always suck at this. I used to be an Air Force pilot and I've been trading since I was 18. About 10 years ago, 12 years ago, I finally got into business, mainly just so I could create more capital for my trading account because trading is weird. You can get yourself to the point where you're making 10, 20% a year. But if you're trading with like a 10 grand account, that's like nothing. And then what happens is people get frustrated and like, I want to turn my 10 grand account into 100 grand. They take loads of risks and they blow up. And like 99% of the time it's risk management, which is why people blow up. And so I thought how, Richard Branson always says, once you got something, scale it. So how can I get more capital? And that was around the time I read Rich Dad, Poor Dad. And I was like, I've got to be a business owner. And then, for the first 4 or 5 years of business was a screw up. Literally nothing worked. Yeah. So, my mantra these days is do, fail, learn, and pivot until you hit your goals. But do it as fast as you freaking can.
It's a very good mantra.
Yeah. So fast forward, I've had loads of losing years. Business, I'm distinctly average, but I've got a bunch of businesses, so it's all right. And trading is my thing, really.
That's still the core.
Yeah, so I look at it like weapons. So in the military, you're taught to use the correct weapon for the correct target. And so let's say you had some weapons, a pistol, a rifle, an RPG, and a nuke. So with a pistol and rifle, you need to be extremely accurate and very good at those skills to be accurate to get lead on target or whatnot. And, even a few millimeters off, it's inches or feet off downrange. With an RPG, you can be less accurate, but still get devastating results. And with a nuke, you can sort of lob it in the general area and still hit target. And I take that same sort of analogy into investing and business and whatnot. And so like trading is like my pistol. You have to be very precise with your trading. So that's my core thing. Trading and investing. Business for me is like my rifle. Like I'm not an Elon Musk or anything, but I can take a business from scratch and get to 10, 20 grand a month profit relatively fast. Because in the startup phases, the rate of growth is, you can just do that with rates of growth. You go from 1 customer to 2, was 100% growth. 2 customers to 4, it does plateau. And I found that sort of fast growth plateaus when you get to, I guess, 250 to 750K annual profit or EBITDA. And then it's, you're starting to look at sort of 25% a year or whatnot. And for me, the RPG or even the nuke was mergers and acquisitions. So I've been doing M&A for years now. Again, probably the first 10 deals I did, I screwed up. But that is, it's like a nuke. You can be distinctly average and do all right. with M&A, but all of that is just so I can have more money to play with Dogecoin. No, no. But just I just like playing with the markets.
So how much time do you actually spend now on the trading side?
I
guess it varies.
So my guilty admission is that my mind is always on the markets, but because I'm not a day trader, I trade and execute on the higher time frames. That is relatively little, if that makes sense. So I'm constantly monitoring stuff whilst I'm playing Call of Duty. On the other screen, because like if you're operating, say, on the daily chart or the 4-hour chart, or let's say the daily chart, you only get one new candle every day, and like for a move to play out, you're looking at sort of 20 to 30 candles. So for a proper move to play out, so that's basically a month. Or if you're operating on the 1-hour chart, that's 20 to 30 hours. So it depends on what time frame, but I guess I'm still spending a good 3-4 hours a day just staring at the screen, but that's during my COD time as well. So I'm sounding incredibly unprofessional right now.
And that's normal for this podcast. And all crypto stuff. Yes, no, like
yeah.
Alts.
Yeah, so I've been a currency trader since I was 18. And I'm 37 now. But the thing with with currencies is that it's good for normal sort of old school trading, and like you really don't care about the directional bias of it because you're not buying a shit ton of euros or dollars or whatever. You're just trading the movement of it. The reason I like crypto is, one, it's more volatile, and two, you can actually there's just far more upside. So let's say you're finding an asset which is coming out of a bear market, very much like now, and prices are subdued. Not only can you go in and do a big spot purchase, like buy a big chunk of whatever to sit on for the long term, as it's going up, you can then start trading it as well. So you're exacerbating your potential profits. And I guess on the way up, you can also, well, I guess there's 3 upwards vectors for, the beginning or mid bull market. You buy the token to hold and sit on. You trade it, using various long strategies. And if you, depending on the project, you can stake it as well. So you're getting the yield from the staking. You can trade, So there's basically 3 vectors that help you grow your portfolio. But in a bear market, there's really only one thing you can do. You can trade it, but really you got to exit to cash and sit on the sidelines, really. So you got to be so all the times I've had big windfalls on the markets is yes, during bear markets, like big sudden crashes, but really it's been in the bull market, just because you can exacerbate things a lot better. So
versus the currency markets, where of course there's way less upside vectors and percentage moves are significantly less risks.
Yeah,
also either trade with much higher leverages or just basically experience less.
Yeah. And if any currency goes too far out of whack, the central bank will just step in and go, oh, nope, and then do some sort of monetary policy to reverse it. So having said that, every currency against the dollar has basically died over the last year. So euro dollar, pound dollar, like everything is dumping. So yeah, unfortunately I haven't traded it. I just haven't touched currencies for a while now.
But so with the trading of cryptos, last year we really saw the birth of trading of NFTs. Something which myself and Matt have certainly dabbled in. To varying degrees of success. And a lot of the kind of same principles apply. But of course, when NFTs really hit the mainstream back in kind of 2020, kind of peaking out 2021, it was a hell of a minefield. I mean, I don't know about you, as people who are in the crypto space and paying a lot of attention to it and interested in trading and that sort of stuff. Even when I heard about NFTs, I was head confused. It really took me a while to get my head around it and to really understand it. But of course, you're educated around this area and experienced it myself. So what was your initial reaction when you first saw NFTs breaking into the mainstream?
I didn't understand it. That is the honest, first take. I just saw, these Bored Apes being sold for ridiculous money. And to a degree, I still have somewhat of the same view of I feel like an old granddad looking at the internet going, what is this rubbish? And I'm seeing, people spend millions on a 2D cartoon of a monkey. And I guess the old part of my brain, because I just don't understand it. Or, someone buying Jack Dorsey's first ever tweet for, was it 2.1 million? And I was like, what's the point? Like, where is the value in that? But having said that, I'm not in the world of art. Like whenever I had these conversations with my mates who like buying Banksy's and stuff like that, they're like, you just don't get it, Siam, blah, blah, blah. I'm like, yeah, it's just you don't have to understand everything, I've realized. But I do understand the scarcity thing. So in a world where we have, expanding population for the moment, expanding currency supply, expanding everything, interest does start, more interest is then applied to scarce things. So it could be beachside property in the Hamptons or sandbanks in the UK or stuff like that, or fine art, fine wine. And I guess NFTs has really captured that sort of part of art.
Yeah, I think, although it took a long time, so because a lot of these first projects, CryptoPunks in particular, that gap between 2017 and 2020 to even sort of really 2021, towards the end of 2020, I guess, but it took that long for anything to happen, really.
Yeah.
They were free to begin with, and then, there was a lot of movement. So I think that I'm sure that even the people involved at the time had similar thoughts and opinions. I'm quite sure. Were you, because I didn't know anything about crypto really until a few months before learning and finding out about NFTs. What was it? If you're, I don't know whether you have sort of groups or connections or whatever, but was there chat about it? Were people aware? When did you become aware of them? Do you remember?
I think it's when really Bored Apes. Sorry, I'm pointing over there. There is a picture of a Bored Ape over there. That is when they sort of started exploding.
Yeah,
so
okay.
what year was that?
That was
2020?
like summer 21.
Because that was when you got in quite early on that, and famously, obviously, wrote it up to all the glory that it went on to be.
Lovely. Nice.
Yeah, but that was still, I think, a few months after the free mint. I'm sure they sorry, not free mint with Bored Ape. They were 0.08 or something. But that would have been, I guess, the first half of 2021. But they then really started to take off and hit some crazy numbers in Q3 and definitely Q4 21.
Mm-hmm. I think I also sort of scuppered myself. So one of my standing things with crypto, especially with crypto, is the first time I hear something which, it's the new thing, whatever, I always on purpose just go, yeah, whatever. I ignore it.
Yes.
And because I have a trading community around me, I do that because eventually a whole bunch of my students will keep on prodding me. So when I get sort of 5 or 10 of my students who I trust because they know they've been taught by me, they know how I think, and they start prodding me, going, Simon,
you should have a look.
Yeah, and then I have a proper look, and then so that the community is a bit of a filter. But until then, I get propositioned every week. Check this out. This is it's going to kill the dollar. It's going to kill. I'm like, the amount of gold-backed crypto projects have been punted my way is just like, and insert any other sort of crazy project. But
it's the bloody wild west out there, isn't it? The problem is when you have these crazy markets which spawn these projects, be it the crypto project, NFTs, whatever, that do result in these crazy 1,000x's. It whips everyone out. All of a sudden, your analogy talking about how with trading and the typical currency markets, for example, you'd expect to make 20% a year to a very good trader, and how if you work a set around of 10 grams, which is like realistically, the majority of the population would even be having around that kind of level, then you're going to recognize that, and all of a sudden you will be actively seeking out these 1,000 X's, especially everyone knows a flipping mate who's bought something
exactly
at time and made a shit ton of money. Like everyone just knows those people. Whether or not it's even true is another thing. But as a result, it spawns all these potential projects. With that comes bad actors, right? Wherever there's a lust for money and opportunity, it's not long before the bad actors are in place. And I know this was one of the prime reasons why certainly NFTs have steered very clear of your personal portfolio thus far.
Yeah.
Why you talk just a little bit about that?
So the other reason why, I veered away from it is because in the trading world, I've seen so many scams, like from Ponzi schemes to scams. Like OneCoin, I was talking endlessly about how OneCoin was a massive scam. Yet it sucked in over 3 million people.
What's that one where there's a video of you on YouTube? He was like completely convinced that.
Yeah, I know the owners. I'm like, well, no, it's a scam, honestly. And like all of these USI Tech, Beard Connect, all of these, they all end up being Ponzi's and whatnot. And there's one which I'm probably going to get loads of hate. Hex. It's just a matter of time before that just topples. But I will, once this airs, I'll probably get a bunch of, that cult now sending hate my way. But it's from a marketing perspective, like they've nailed it. All these cults, whether it's a crypto cult or some random American cult, like how they get into people's heads and then just take control of their brain is just, it absolutely fascinates me. I've always tried to understand, what do they do to like brainwash people that quickly? I don't know. But going back to one of the reasons I stayed away from NFTs is that I think something like 85% of all NFT volume were from 15 wallets. And there's been various studies around that. And old school washing the tape applied. So and I said this back in, I think, 2020 or something like that. If I wanted to, I could pluck up an NFT out of my ass and purposely manipulate the chart. And the way you do that is you can set up a whole bunch of anonymous wallets. You can fund them all. And you can fund them not just, it's a bit obvious if you have one main wallet and then you fund all these, skeleton wallets with one. So you can basically set up a whole bunch of different wallets, fund them anonymously. And then I could basically get a napkin, draw a weird willy on it or whatever, and make 100 versions and different pictures and call them Weird Willies, let's say. Siam's Weird Willies collection. And then I can then post it on OpenSea or whatever NFT exchange, where all the volume is. And I would then start trading, this collection. Let's say I bought the whole set. I would start trading it amongst myself. So I'd set the floor at, 0.1 ETH. And then over a period of time, all of these different wallets, and I would get a script, like a bot, to basically create, 2,000 wallets. So it looks like there's some sort of organic, but, if it's like 10 wallets constantly, it's a bit obvious. Yeah. But you could easily get a script and, set up 2,000 wallets. And over a period of, let's say, a year, just constantly trade it. And if the chart starts going too vertical, you start selling it at bad prices. So, you're driving the price down. So it looks like a nice organic chart. You put in some crashes every now and then, and then before you know it, you do this until, and if you, depending how scammy you want it to be and what your eventual price goal was, you could pay some journalists or some Z-list celebrities to endorse it or, whatever. And then let's say the goal is to sell it to some sucker for £1 million, then you keep on trading until it reaches and then some random person comes in and buys it for £1 million. You're like, sweet. So now you've got all the £1 million. That person's got the collection which you just made up. And this is where the tax dodge comes in, because you're sat there with, technically, if you're going to even declare this, £1 million in profit. There's CGT, or depending where you are in the world, there's a capital gains tax element there. Well, what do? Well, you orchestrate a massive dump. So on the other hand, you would have bought another collection of NFTs, which you've also created, by the way, and you've run this in parallel, and you've made this at a high price. Well, what you do is you then sell the other NFT for a massive loss. So let's say you come in and buy, an anonymous person launches an NFT at 100 ETH, the opening price. You take that, or £1 million, let's just say. You take your £1 million, you buy that. And by the way, because you own it, that £1 million, you still own it. It's just in another wallet. And then you orchestrate a massive price crash. And then all of a sudden, you sell that NFT for £1. So you've lost £1 million. That offsets your tax, your £1 million in capital gains tax. And you still got the money just sat there. Now, repatriating that cash into the real world is another issue, because the tax man, or because Coinbase reports everything to HMRC and all the IRS if you're in the States. So yeah, getting it back into sterling or the dollar, that's a different issue. But most scammers, they don't go back to fiat; they keep it in Bitcoin or something else.
Yeah.
So I was aware of all of those shenanigans long before,
Yes.
Yeah. And it probably still happens.
Well, it probably does. And like you said, with how significant the skewing is towards the small minority of the whale wallets, you can't help but raise some eyebrows there.
Yeah.
And I think as we saw, certainly the last year kind of pan out, because, all the people who said at the height of the NFT bubble that 99% of these projects are going to go to zero were correct. That is exactly what has happened. There's the small percentage that are looking very promising and are all the ones that we're kind of trying to get involved with. But the majority were a bunch of these either cash grab projects or people who had no hope or real desire to build a NFT collection or the utility that they promise in their roadmaps and all that sort of stuff. Along with potentially a whole bunch of projects that were just executing the same sort of game that you've just described.
Yeah, and I think a lot of them, especially in the second half of 21 and then early 22, if you were any good at community building and like sales and marketing, you didn't even have to put that much effort in, because there was so much desire and so much hype around just NFTs in general at that point that actually, if you wouldn't even have to go to those efforts of doing it all yourselves, because if you could just find enough people, and it didn't seem that difficult at the time to create like a Discord that's got 20, 30, 50,000 people in it, then as soon as kind of there was so much hype about the FOMO kicked in, and
get on the white list,
just use their own wallets, and and they would do all that trading for you to such an extent that and there were several that just did that, and then had a roadmap. Every project had a roadmap, didn't they, of like what was going to happen, over the next 12 months, 18 months.
It's the bubble mania, right? People were just ready to throw money hand over fist at any project. I mean, I can remember being sat in my bed on my laptop and browsing some NFT marketplace and seeing a display ad for this collection called like fucking bullish llamas or something. Just like these funny looking llamas. And there was a display ad as well. And what I learned shortly after is any NFT projects that were having to use and rely on ads to generate the hype was just a big red flag. And later went to zero. But I was like, oh my God, bullish llama. I just remember pulling out my credit card and spending like $250 on this bullish llama. He's now worth 2 cents. Just because I was like, oh my God.
It's a little bit like your cat one that you sent into space, right? Is the cat still in space?
Cat in a spacesuit, yes. Another one of my projects, which I was enthralled by. Everyone, you got to get these cats. They're going to go on a mission to Mars, and they did go on the mission to Mars, to be fair. But no one else cares, so it's not worth a lot. But it's just a classic blind mania, right? It's everyone chasing these 100Xs, these 1000Xs, seeing the market going up, thinking that everything you touch is going to go to gold, and just willing to spend these crazy amounts of money.
And I think probably for every one person that's had a bit of a good news, or that has a bit of a good news story, like we were fortunate enough to have, there's probably 50 people that have had the opposite, right?
Millions,
So,
I mean, I see, look at my wallet, I've got maybe 60 NFTs and 2 are worth something. The rest are not. Which just is a good read of the market in general. But how similar did you see the NFT bubble compared to the .com bubble? Because we talk about that.
It's almost identical. I mean, just the adoption of the internet is like or the adoption of crypto full stop is like the adoption of the internet. There's so many parallels in whether you're looking at the big picture, in terms of blockchain tech, or DLT, and the internet, or NFTs and whatnot. And the reason it's all the same is that humans are so freaking stupid. It's unbelievable. Like human greed, power, the thirst for wealth, that never changes. So we are doomed to repeat history's errors, but just with different tools and toys. And that's why markets always behave in a certain way, and that's why we have secular bull markets, secular bear markets, then a bottoming out / accumulation period.
It's true, and it's one of the most things, because I always found, understanding the market's an incredibly difficult thing, because when you look at it on a chart, it's just can be very confusing. It was only when I learned from you, Siam, that the markets, you're not really even trading the asset, you are just trading other people's emotions.
Exactly.
That it really began to make sense, in particular how the patterns work, the cycles, etc.
And the longer the time frame you look at, it's actually easier it is to trade the markets. If you look at big trends, it's really easy. It's just when you jump down into the noise of it all, and everything's going up and down, and it is sometimes like pin the tail on the donkey and just hope. Not that as a trader you don't do that, obviously, but most people do. And using human nature, it's obvious what's coming down the pipeline. We're seeing, this is, what was it, February 2023. I promise you, 2020, this year and maybe next year is going to be the beginning of the hype of AI. So I'm just sitting back waiting for a barrage of AI crypto projects. I think pretty much any crypto project that launches now will have the words neural net, AI, large language module, blah, 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 chatbot, blah, blah. I'm like, decentralized LLM or whatever. And it's just like 2017, where every new project was a blockchain development company or whatever, or coders that had no blockchain knowledge were just saying, blockchain developer, adding zeros in their salary. Just just beware of the incoming AI hype train. Yeah. And that will include AI, NFTs, no doubt. 100%. So ride it. I'm not saying don't do it. You ride the hype, and at least pull out your principle.
And because with any of these things comes an opportunity, right? So
agreed.
And what's amazing is, and I know very little about AI, but what I can see, as I'm sure anyone that's aware of it can, is the speed at which what's happened in the last 3 months, even, everything is getting faster, partly because of AI, but but it is, isn't it? The speed at which the kind of NFT hype went from, certainly when we found out about it in early part of 21 to crazy numbers by the end of 21. I'm sure that was, 1,000 times quicker than it would have been with the whole sort of .com stuff, years and years before. And so, perhaps you've just got to do your own research a little bit quicker if you want to get involved and actually benefit from the hype, right?
And trade the humans. I mean, just look at ChatGPT-3. That hit 1 million users in 5 days.
The fastest platform ever to do feat.
Yeah.
It's
nuts. I genuinely believe at some point in our lifetime there will be $1 trillion valuation business in its opening year.
Really?
I don't know what it will be, in what sector. I don't know. It could be a robotics company. It could be Elon, but there will be, I really do think there will be $1 trillion valuation business that, less than a year old. I mean, look at Binance. CZ started in his garage, and in the first year had over $1 billion in revenue or something crazy like that. It's just
without the help of AI.
I know.
Build out all the platforms.
I know.
It is ridiculous. It's a very exciting time. And I think we just need to play it right for the next few years is the key thing.
Which is really what this Moonshot, what our Moonshot DAO and the reason we started this podcast, really, wasn't it? In terms of we have been fortunate enough to kind of find out. I mean, I've never been early at anything, and I don't feel like I was particularly early at this, but actually compared to the majority of the world, we probably were.
Yeah.
When I remember sitting at Gary V's VCon conference last May, and and I think it was Pharrell Williams was the one that kind of actually first spoke about it from the stage, saying like, just pointing at at the kind of 5, 6, 7,000 people in the room, saying like, you probably don't realize how early you are, and kind of and that makes all the difference, actually being in that initial group of people that can benefit from something and sort of just be. Of course, you've got to be involved. That's the difference. Like, yes, it's all right being on sidelines and just watching, but actually, you're not likely to benefit if that's the case. Like, you've got to actually do something about it, and that's the reason we started this, right? To kind of just, if there is anyone out there that is a little bit intrigued and sort of, has got perhaps a little bit of money, or a little bit of time, and both are sort of equally valuable at, just to be aware and be curious, really, to find out, well, what are the opportunities?
100%. And what opportunities there are. Of course, we know we've just been through whatever the .com bubble cycle for NFTs, all this hype speculation, 99% of projects gone to crap with all the scams and hacks, etc. However, there's significant opportunity in the future, right?
Yes, yeah.
Which does get us very exciting. So let's talk about really why we all have faith in the technology.
Yep.
And really how we see the future NFTs panning out.
Yeah, I'm looking forward to this because I don't know you, Sam, at all. Met for the first time today, and I mean, and it's mentioned, talked about you a little bit before.
All live.
Obviously, you have a very popular, well-subscribed YouTube channel, so I've spent a little bit of time watching and found one in particular which was really good. In that, it was quite focused on NFTs. And the first initial, 10, 15 minutes was spent on the scam part, the bad actors and the sort of risks involved and the negative side of NFTs, to the point of, oh God, this guy really doesn't like NFTs.
Yeah.
I was thinking this is going to be an interesting chat on Tuesday night. But then for the next sort of 45 minutes or so, you then go on to basically say all the amazing things that NFTs are going to bring out in the future. And so quite the about turn in terms of, it makes a lot of
balance.
sense.
Yeah.
But I think you shared a few really, really good examples, which I do think would be very, very beneficial to anyone listening to kind of understand what you think, where you see it going.
Yeah, it's interesting because those positive things that we're about to talk about, I've had these theories since sort of 2015, 16. And I, at the time, had no idea how it would ever be implemented. But now, 4 or 5 years later, it's like, oh, wow. Yeah.
Talking about tokenization of stuff.
Yeah.
Back in like 2017.
Way before cryptos was even, in the lexicon. And now we've got this beautiful technology of tokenization, which now actually makes those old theories like a reality. So now the numbers may be wildly off, plus or minus a few trillion. But when you look at the world of unlocked assets, or no, illiquid assets, I think I read a Credit Suisse report, and there's something like $250 trillion worth of assets which are illiquid on Earth right now. And that's everything from commercial, residential property, it's generally property, and businesses as well. So businesses are technically an illiquid asset because you can't just overnight sell your business, or it's very rare.
What's the fastest you bought a business?
About 7 hours.
Really?
Yeah, I went into a business at it was like 2, 3 in the afternoon. And then by midnight, I'd walked out owning 80% of it.
Wow.
Yeah, and that...
yeah, so it can be done.
yeah, it can be done, actually, yeah. And that business didn't do very well, but in hindsight.
Maybe this two are related.
Maybe. But yeah, so illiquid assets. And because they're locked, there's no velocity of cash flow. There's no velocity. Like you see with aristocrats, for example, in the UK, there's a huge amount of aristocrats which are worth billions, but they are cash poor. And I went to a nice school thank you, parents. And I was the poorest kid at school by a country mile. And I was just like everyone around me. Oh yeah, we own this part of Norfolk, and we own this part, and we're like, Jesus Christ, I don't own a house, and all their their farms, whatever, handed down generation upon generation. They had 3,000 acres here and another 3,000 acres there. I'm like, Jesus Christ. But the common thread I saw with a lot of these families is that they were very cash poor. One, they had to spend shitloads on maintenance of all the buildings and halls and mansions and whatnot, and they're all locked up. So when you look at that across the whole world, if you had a magic wand, which you could effectively sell chunks of that liquid asset, just like you could sell Tesla stock or Apple stock like that, it's going to create not just a whole new market, but loads of spin-off markets. So, for example, I like the idea of not agglomerating your business, but let's say you had you're a business owner and there was the local stock market. Where are we now? Stratford. So you can have a very local stock market, the Stratford stock market. And if you're a small coffee shop owner, etc., well, you could tokenize your whole business, put it on the Stratford Stock Exchange, and technically your whole net worth, let's say your whole life was this business, you could see your literal net worth on your mobile phone based on the share price of your stock. Whereas if you had to, we're in Botter's media agency office at the moment, if someone said, what's your business worth? It depends on the buyer, doesn't it?
A couple $100 million.
Yeah. yeah. Plus or minus a couple $100 million. But it really depends. One, how well you tart up your business before you even put it out on market. Two, what's the general climate? Three, who are the buyers? Have you created a bidding war of some sort? Is there some sort of opportunity that you're capitalizing? Or is it a PLC that just wants to gobble you up for your revenue and user base? There's so many different things, but you can't just sell your shares. So it's highly illiquid. But for me, the thing I've always said for ages is that estate agents I don't like estate agents. Sorry, I was going to choose a unchoice word there. And it's just selling a property or even buying a property is just the most archaic process ever. There's no logic at all. There's a billion middlemen which don't need to be there, and there's no reason why you can't have a decentralized version of Rightmove or Zoopla and buy a house in under 5 minutes like you're buying a pair of trainers on Amazon. And this is where everyone goes, yes, but you got the surveyancing and all the I'm like, no. That can be streamlined. It can all be on a smart contract. Literally.
Still immutable.
Exactly. You can do all the contracts and legal work, put them on the smart contract. Then the whole housing market is basically like a vending machine. You go to a vending machine, you want a chocolate bar, you put your £1 in and press A2 for your Snickers. It should be like that for the property market.
100%. Because I've always found it a blocker when I was growing up and interested in investing, particularly when it would come to either property or indeed businesses, and seeing some exciting disruptive startup businesses that would even have the options out there to invest in them. But of course, before they even go public, even the thought of cashing out of the shares has become very difficult, right? And it's always just been a blocker because I'm actually investing in these things, unless it's like the mainstream stock market through an ISA or a pension, one of these things. Unless you're a really savvy individual, it's just a blocker there for the general public. And so this tokenization certainly opens up a realm of possibilities and actually can bridge the gap and make these things a lot easier. But for the benefits of our listeners, could you explain the tokenization element that you're talking about?
Yeah, so let's take a house. That's probably the easiest way. By the way, I just want to stress, if you were to just tokenize property, so real estate just real estate alone, just the market cap of that, tokenized real estate would be trillions, literally hundreds of trillions. And if you look at the whole crypto market right now, it's $1 trillion. Like the whole real world asset tokenization play is far bigger than Bitcoin ever will be, or ETH, or add any crypto in there. That is the future of crypto, in my opinion. and other cryptos is going to be like the oil that greases, the inner workings of it all. So let's take a house. So it's typically the most expensive thing anyone buys. For most people, they spend years, decades saving up for a deposit. You spend stamp duty, fees, blah, blah, blah. And then you got a house. You think you've bought a house, but you haven't. You're renting it from the bank, basically. That's what every time I see on Facebook, someone jingling the keys in front of their new house, I'm like, you're just renting it from the bank for 35 years and then they give it to you. And also when you look at the actuary charts, like typically people move house within 15 years. And that makes sense because you buy a house, you're raising a family, kids get bigger, you need a bigger house, so you move house. And so a lot when you look at the principal payoff, not much of the principal is actually paid off in the first 8 to 9 years or so. And most people move house within 8 to 15 years. So the second you move house and you enter another mortgage, the bank's got you. And the word mortgage is, from the French. The word mort is death, and gauge is a measurement. So your mortgage is your death measurement because typically by the time you paid it off, you're dead. But let's take your house. You basically have one barrel in the chamber. If you want to sell your house, you're bloody hoping you're selling it at the right time. You can buy another house, especially if there's a chain there. There's so many like cats you're having to juggle. And you hoping to sell it for the right price, the right time, right everything. And it doesn't need to be like that. You can make it like companies law. Like it'll be far more efficient to be able to chop up your house into say 100 tokens. And then those tokens would come with some sort of shag, like a shareholders agreement, like in the company. And a shag, sell your house and get a shag. That's like an OnlyFans version of. So yeah, and that way, if you wanted to, instead of refinancing it or remortgaging your house and going through all of that bollocks, if you wanted short-term cash flow, you could sell chunks of your house and then you could buy it back when you're better off. So you don't have to do drastic things. But even better, I think the 50-year-old fallacy of every man must own his own home. And by the way, I know we're doing the whole gender thing. You can't say every man but that phrase is from was it Reagan or Nixon? It was whatever US president was with around Margaret Thatcher era. I think it was Reagan. But they literally set up the campaign of every man must own his own home. And that's why from the 70s and whatnot, property just boomed. So what was I going to say with this? I am chatting shit. Sorry, I lost my train of thought. So, So instead of being a very binary thing where you either buy a house or you rent, I think we're gonna have this lovely, lovely hybrid where yes, you can buy the house, but you can buy say 25% of it, or there'll be a nice sweet spot where you can buy 30% of a house. You have all of the rights of being a typical homeowner. I can put shelves up, I can put an extension in, blah 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 blah, and you don't have to get permission from anyone. But you don't have to buy 100% of the house. Instead, you can put, say, 5% deposit down for the 30%, whatever. So instead of really coughing up 400 grand, 500 grand for a house, whatever, you're coughing up 100 grand or whatever. And all of a sudden, that makes things way more appealing. And it doesn't have to be one other person owning, say, the other 70%. It could be a community. It could be 1,000 people owning the other 70% of your house. So it's actually encouraged that you as a homeowner helps, put the shelves up and put a swimming pool in it or whatever, because it's for the betterment of all the other shareholders.
In your vision of that, do you see it that a bit like what do they call when you can buy as a new home as a starter thing, you can buy a percentage house share? No, whatever it's called, when you don't have to buy the whole thing. The housing association owns the rest of it. The word, but they're paying the mortgage for their 25% that they bought, but they're also paying a rent
to buy.
Pardon?
The help to buy?
Yeah, the help to buy scheme things, but they're also paying a rent to the housing association who owns the other 75%. Do you see it that sort of thing would carry on, so that the holders of the tokens are getting an immediate benefit as well?
Yeah, it depends. Like I think there'll be different things. Yeah, like with business, you could do all sorts of different things with your shareholders agreement, and it'll be the same. And no, think about it. Yeah. Because ultimately, when you buy a house, most people, they want it for capital appreciation.
Yeah.
But I guess
Yes.
it depends what type of house. Like, it could be an investment property, and then then the rent goes to the yield. The yield goes to the shareholders.
Exactly. So, for example,
Real time.
we're part of. I almost don't want to say this because I didn't gauge whether you know him, like him, or whatever. But we're part of Logan Paul's DAO, right? Originals.
I've no idea who he is.
Okay, wonderful.
Is he a boxer?
YouTuber, and he started boxing.
Kicked it all off, yeah.
Yes.
Wait, which one? So there's Jake and Logan.
Yes.
That's all I know, and one's a boxer.
So
Jake is
the
one who's
original boxer,
pursuing
right?
the boxer. He's fighting Tyson Fury's younger brother next week. Logan Paul did a bit of boxing and signed a YouTuber. They started the whole YouTube boxing thing.
Yeah,
that's all I know.
But within his originals DAO that we're part of, there's been quite a lot of discussion about they want to start buying properties to do Airbnbs from them, right?
Okay.
So
Makes
like
sense.
quite elaborate sort of amazing properties that there can be this sort of originals DAO themed property that, of course, kind of using so he's got a huge subscriber follower base that, if people could say that they've just spent the weekend in Logan Paul's sort of Airbnb,
I see, yeah.
There's a bit of draw there. But there's the benefit of, well, you buy a £1 million property in Miami. That's, hopefully it's going to rise. You've got that capital, hopefully sort of growth over the long term, but also it's an Airbnb. So every weekend or every week or whatever,
cash flow,
you are earning some revenue from that property. And so, like, I guess it's the same as that.
I think it's going to be a very basic version of tokenizing a real world asset.
Yeah.
What they're doing there. But eventually because the world naturally moves to more efficient way of doing things. So if you look at, say, tech, there's an ever present pressure of reducing cost of gross marginal cost. So, for example, it took trillions of dollars to research and create the internet as we know it. But now we can access the internet for like £30 a month or whatever. And that's the pressure of things spiraling down to gross marginal cost. Same with data. Data used to be incredibly expensive. Now data is coming out of the yin yang. So everything tech-wise drives down to gross marginal costs. So having all of these siloed, like off-chain markets, like the property market and whatnot, is just grossly inefficient. So eventually there will just be, just like we have the internet and you can just post a website willy-nilly, there'll be random marketplaces. And if you go back in the day, there used to be something like 30 to 50 different stock market exchanges in the UK.
Really?
Yeah, and then eventually we got, I think it was really in the 70s, they all sort of amalgamated, and then you got the FTSE 100, FTSE 250 and whatnot. But it's actually fairer for everyone with more decentralized free markets. And that's where, you'll see, I think, housing.
What do you think will happen to prices of housing? And do you think that actually when it becomes tokenized, it could actually inflate at a significantly accelerated rate? Because I'm picturing a newly unlocked world where all of these liquid assets are now on these marketplaces. And now we can all actually begin to add to our portfolio. I want 100 tokens, 0.5% of these properties in Mayfair and a few in Miami and all this sort of stuff. And by all of a sudden, making it really easy, can go on, load my wallet with my card and buy a few tokens. B, making a decent user experience so it becomes understandable to the public. And C, the kind of unlocking of all of this capital. Surely that would cause a mass influx and potentially...
From a fundamental point of view, it's actually deflationary. I think, again, you're trading humans. There will be the first few years of the hype spike. So everything you just said, spot on. Everything is more free and loose, and it's just easier to people will just sell like 10% of the house just for shits and giggles. Go, how does this work? I'm going to sell 5% of my house because it makes no effect. It's like freeing up cash.
Buy a car or something.
You still get to live in there and do everything. So why wouldn't you? But what happens eventually? Fundamentals do kick in, and what all this means is that there's the amount of stock available suddenly is exponentially increased. Therefore, so much stock is available, prices actually will start to come down. And this actually combines with 3D printing as well. So when you look at the rate of innovation and progression of the tech of 3D printing, it's just monumental. Everyone's fixated with cryptos or AI or whatever, but 3D printing is doing this in terms of growth, and it's now no one's really tracking it. So, for example, there's a company in the US called Acon, and I think they printed a 600 square foot house in under a day for under $5,000 4 years ago. And now the tech's got so good, you can recreate that whole house, a 600 square foot house, and it's under $1,000 now, and it takes hours.
Jeez.
Now,
That's crazy.
if you just let's say just put a cap on innovation on 3D printing, etc., or construction 3D printing, even over a 5-10 year period, that tech just gets freaking insane.
Mm-hmm.
So, I think it's too late to keep letting the cat escape, because you'll have people like myself who just want to do it because I want to do this for shits and giggles. I want to. Once I've cleared my plate a bit and I've sold a business, I want to go and bring a 3D construction printer to the UK and just print some houses. Why not? But here's the thing. Let's say you have let's say in Stratford, Taylor Wimpey buys some land and you buy some land, equal size. Let's say they're the other end of each town. And Taylor Wimpey builds very slowly 100 houses, and they're trying to sell them, I don't know, £500,000 each. 2 up, 2 down type standard bed house. And you come along and print 100 houses in a month, identical in every way. Obviously, with both houses, you still need to get the electricians in, the plumbers in, and all that. Those costs are going to be the same, but the basic structure's up. And because the cost of building those houses is markedly lower than, say, Taylor Wimpey's, instead of selling for 500, you're now selling it for 350 or 200. Just if you want to revolutionize or really shake up an industry, you need to 10x. 10x is the key. Either 10x prices down, 10x efficiency up, or whatever. But even if you undercut them by half, all of a sudden these houses selling at 250k is going to instantly depress house prices in the whole area, because every other house in that street or within a few mile radius is just, oh shit. And then it's going to start sparking a whole bunch of other, way more capable individuals and business owners, way more than myself, with deeper pockets. They're just going to be like, oh, sweet. Like, who's going to take out Taylor Wimpey and all these big housing builders? It's not going to be from within. It's going to be, like Google's the monopoly. All of a sudden, we've got OpenAI now, for the first time ever, jeopardizing Google's whole business model. So it's going to be like young upstarts that no one's ever heard of going, ta-da, we printed this house today. 3,000 square foot. It's only 400 grand. It's like, fuck it up. Yeah. So the key thing, I'm obviously bigging this up. You still got to, I think land prices will stay buoyant because land is not, increasing. You still need to buy the land that you're printing the house on. You still need to put, the electricians, plumbers, all that sort of stuff, the cladding and all the interiors. So, but I still think you can massively undercut the norm. So when you combine that plus surplus of stock once everything is all tokenized, I think housing prices are. I'm not bullish at all, mate. And when you look at the bigger picture, so human growth, human population growth, there's a massive myth about human population. There are some very inaccurate studies done, like in the 60s, which the whole world seems to have picked up and just
taken for gospel.
Yeah, and when you look at any current studies, we are on the precipice of dying out into a cold, slow, wet whimper.
Humanity's greatest challenges, Mr. Elon Musk proclaims.
Yeah, for the first time ever, Japan lost more humans than it created.
Well,
last year.
I saw
it's never happened.
Yeah, I was listening to some potential forecasts saying that China could be staring down the barrel of a population of 500 million in the next, 2 decades.
I believe that. their top-down demographic is they're just full of old people, no producing people. India is not the same fate. I think what will happen is that China will be spending shit tons of money to India for workforce. But yeah, like I think we peak at something like it's either 12. There's a deep YouTube video of this on my channel. I spent ages talking about it, but I think like everyone say, oh, you know, the Earth can't cope with 100 billion people because we're now at 8 billion people. Recently, we've just gone over the 8 billion mark, but I think we top out at 12 billion over the next sort of 50 years, and then it's downwards forever. So if you look at the charts of fertility, it is a vertical line down at the moment. Vertical. Like the amount of miscarriages is going up like crazy. The amount of SID, so sudden infant death syndrome, that's gone crazy. Yeah, just birth rates across the globe are declining. And so when you have a declining population, more stock because everything's tokenized, and 3D printing, I just think housing is just going to get gross marginal cost.
Yeah, it's a very interesting hypothesis. A declining population, declining economies are not good for any market, let alone just kind of thrown in.
Let alone World War III, maybe. I don't know. Like
we'll see.
And but these are big stuff over the next 10 years. But over the next decade. Sorry, 10 years.
One more really interesting example that I hadn't thought of, which I did enjoy from one of your videos, in terms of NFT usage as a key or as keys for stuff, like having just rushing here, having just checked into a hotel down the road for like must be over 20 times at this stage, still having the fact that I still have to scribble my name and address on a piece of paper, which I did 2 weeks ago. But the way you talked about it, and I'll let you talk about it, the fact that that could be an NFT in the future that I hold, but then is activated and allows me, go ahead.
It's time-stamped, time expired.
That is an exciting prospect.
I can't actually remember the exact example I said in that video, but there's loads. Like, let's say rent. So you go back to our thing. So you have a house, it's all tokenized. A whole bunch of people own this house. Let's say it's a pure investment property. And this house is out there renting. Well, at the moment, homeowners have real problems with tenants that can't pay, won't pay. It takes literally like 12 months to kick someone out. Mm-hmm. And that's 12 months of squatting. And you have these families, which are basically professional squatters. They squat for, in a house for 12 months. They get booted out and they go, they do it again. Well, you could have an investment like a rental property where there is no physical key. The key is an NFC type card thing, or even a code. Mm-hmm. And because everything is done with smart transactions and real-time payments, like the rent isn't paid every month. The rent is paid on a daily basis from your wallet, smart wallet or whatever. Mm-hmm. And the second you miss a payment, your card just doesn't work. And it's the same with like cars, like for insurance, like real-time insurance. It'll be the same. Like everything will be tokenized and somewhat digitized in a smart manner. So like your car, like the moment your engine is like the moment you open the door, car insurance is active. The moment you shut it and lock it, it stops. There's no point paying, so
the moment you hit the man on the motorbike.
yeah, exactly. But I mean, hotels, honestly, why can no hotel get their check-in procedure right? It's just
No, I mean, the thought that you could buy an NFT for a hotel that you use like regularly, and then choose when it's active, to work as a key to the door, and the fact that all that can be done on the smart contract, and I can see it, I can picture it happening. Like it makes so much sense, and of course it plays into the loyalty program that the hotel has, because a lot of them, I think, will probably start off with their loyalty program being an NFT anyway, probably even before they realize that it could also be the card key to get into the door.
Yeah, I mean, we saw Starbucks take the plunge, right? They're one of the big brands who, their loyalty program's mental with what they did with their Starbucks cards. Because I'll butcher the figures here, but it was like at any one point there was like $2 billion that are just in Starbucks apps, ready, like waiting to be locked up, that can only be spent at Starbucks. And they're one of the first big brands that is obviously investing heavily in the NFT technology to bring those sort of, utilizations like you've just described, but to coffee, not to hotels. But one big area I want to discuss with you, Sam, because I like your views on this because they're kind of funny, is the metaverse, okay?
Oh, yeah.
Because in NFT, the height of flipping, the hype, everyone was talking about the metaverse, flipping Facebook, going change the name to Meta. And, both of us are very interested in the world of games and have both tried out all sorts of VR. But please give us your thoughts around the metaverse.
Utter bollocks. It really is. So the success of the metaverse really comes down to realism, right? So as in hardware at the moment. VR tech, VR hardware is just crap. And I routinely, like every 2 years, I will literally buy the best freaking VR headset money can buy. And it's still crap. Even the good ones these days, it's still like looking down two bog rolls. And after 20 minutes, you do get immersed and you forget you're in VR, but it's still crap. And in order, like if you've watched the film Ready Player One, like that is what VR could be. But in order to do that, like I think people think, let me start again. The way that people are aiming for the metaverse is an inefficient route. Because down that route, even if you make the headsets, swimming goggles, you still got to wear a full haptic bodysuit, which you're going to sweat. Or, it's not correct. The only way the metaverse will work and Ready Player One type world will work is when you have a BMI and you flip, so a brain machine interface, a chip in your brain, and you flip the switch, and you're now literally in another world. So researchers have already videoed people's dreams. So we already have that capability. We can take pictures of people's dreams and we can take moving video of people's dreams. It's very pixelated. So now researchers are trying to get better resolutions. It is freaking scary, isn't it?
It's terrible.
So
some of the things.
Yeah. Do you dream about Matt? NFT me, Matt. And so, like, when you're in a dream, in a good dream, you think this is real, don't you? You forget you're dreaming. Sometimes you're dreaming, but when you have a chip connected to your brain and, in the right parts, Elon with his Neuralink will know way better than me. But eventually, let's just say it's in 5 years' time, or hell, even 15 years' time, we will get to the point where we can flip a switch in our brain and we will be in another universe, which will feel real. You can simulate real pain if you wanted to. You could be Superman and that's again crypto. The currency in that universe will be crypto, obviously, and everything will be smart and like a smart contract of some sort. You'll be able to build your own world, so you can be Superman in your own world and fly around and all that sort of stuff. That's the future of VR. I think it's a dead man's end going down the hardware stuff because you can get visual realism relatively soon. So they do say you'll be able to have real world resolution relatively soon. I think they say within 7 years there'll be a headset where you put it on and you won't know the difference. It'll be
The caveat is it's just the flipping headset, and if anyone's used one, I mean, Matt actually won one. Gary Vee. Find it out. Yeah, I haven't actually put it on yet. Well, I do now, Aaron. And Oculus Quest.
Oh, nice.
And I actually said, it will get real world, but nothing will take away from the fact you've got a big thing on your head and controllers in your hands, probably.
Controllers or a full haptic suit. Yeah.
And it gets, I've played quite a lot of VR, and to take that VR afterwards, you're dripping with
sweat. Yeah.
And it's just your neck hurts and all this sort of stuff. So here's a big blocker. However, to tie this all back to the investing standpoint, I think it does potentially propose some lucrative investment opportunities and potentially some very dangerous ones.
Yeah, you just got to ride the hype. That is it. So if you're going to play it, you either sit on the curbs bitching about it like I do and not touch it. Or if you want to get your hands mucky, you play the human element and go, right, you treat it for what it's worth. It is bullshit hype. The tech's, decades away from, being a reality, and you just ride that curve. And the moment your stash doubles, you pull out your principal, and then you're in for a free carry.
Mm-hmm.
And you then you're in a risk-free element. And then, just, let things run. Yeah. Some will crash, some will moon, but that's my personal take on it.
Yeah.
But, people spending millions of pounds in Decentraland buying up property there. It just boggles my mind.
Well, what do you think then about, because this is a kind of softer version of the metaverse where you're not in the full immersive VR realm, but you are just engaging online. For example, I spend a lot of time, more than I care to admit, on Fortnite. Yeah. And I know you're an avid player of various games as well, where you spend a lot of time in these virtual worlds.
Yes.
Actually, the number of hours of which we probably both be ashamed to admit. And, let alone the amount of money that we spend in these games, particularly Fortnite, which is actually free. However, I managed to rack up a serious 4-figure bill over the years. Christ. But people do spend a lot of time in these worlds. And Fortnite, for example, just because this is recent to me, but they have all sorts of random events in Fortnite. So for example, the Kid Leroy, who's the US, I think it's Australian artist, recently had this whole in-game event, and you would join in and you'd be in the Fortnite world with all your mates. I'm set my lounge, headphones on, and it's like a live immersive concert to the Kid Leroy. And then the next day I was watching Fallout Boy perform in Fortnite as well. In these little metaverses. And, there's a lot of people gathering there.
Yeah.
And it's not this full immersive VR kind of thing. But I think it presents potentially an opportunity, particularly in the NFT space, because you've got things like the Sandbox and Decentraland, which I've never played in. And I do think they're maybe a bit overhyped. But we do have these things that exist already where lots of people spend a lot of time. And how long is it before those things become tokenized and NFTs get involved and actually have their own coins as the in-game currency that really do present a big thing? Because, you look at the revenue Call of Duty and Fortnite are doing from Warzone and, the Battle Royale respectively. They're games that are free to play, and it's billions and billions of billions.
And you're building up all these XP tokens, which are worth nothing. So, it makes sense that, all these hours that we're investing in COD or is some sort of currency that we're building up for better skins, better weapons, blah, blah, blah. But you mustn't, whoever, if you're a game developer, don't fall down the Axie Infinity bullshit route. And I called them out a long time ago. And unfortunately, it's happened, because what happened is, though people, in the early days, everything is peachy, right? You play Axie Infinity, you get SLP, and then you can sell it, and the price is going up. But the thing is, when you're playing a game and you're getting a token, and there's only a sell vector, what are you going to do with it? You're going to sell it, right, for real cash, ether or fiat or whatever. If everyone is just selling this damn token, it's only going to go down. So you need to have when you're doing the tokenomics of it, you need a legitimate, valid buy vector, as well as, the sell vector is going to be normal. I spend 100 hours playing COD, I get X amount of tokens, I want to spend it, right? To not feel guilty. And so, so the sell vector is fine, but what is the buy vector? So, what can that, buy? Does it buy you, I don't know, half an hour coaching call with a pro player? I don't know. I don't have the answers, but it's something that you need to do well. And I think it's the low-hanging fruit. Activision, for COD, all they need to do is just make the next COD tokenized. And then all of a sudden you've got, how many hundreds of millions of users do you have?
A lot.
Loads.
Hell of a lot.
Yeah. And then kids can go, hey, Mum, I'm earning money here. Leave me alone.
I agree with the day Fortnite becomes tokenized, because I'll be in there. I'll be in there.
Yeah.
Well, gents, we're under a bit of time pressure today, unfortunately. But thoroughly immersive.
Has it helped?
So far, it has been. It has been. So, any closing remarks?
I think it's I've certainly found it very interesting. Hopefully, any listeners have too. I think it's it's the first time we've had a slightly less positive, kind of bullish viewpoint on NFTs, you know. So I think that it helps to balance it out for sure. I think it's very interesting that we've touched on the longer term, you know, how they're going to stick around or why they're very, very, very likely to stick around, and why, even if people are listening and still haven't actually felt the timing's right, or actually got involved, it's still worth finding out, because it's going to be most likely part of everyone's lives in years to come. So hopefully that's been helpful for people to kind of get a perspective on.
I've got one more thing I just remembered. BlackRock, the world's biggest money manager, they got trillions in AUM. They've basically put their flagpole on the ground, and they're going heavy in real world asset tokenization. Right. So, I mean, BlackRock basically controls and owns the world. So you know it's going to happen. And also the World Economic Forum, they're already hinting that we will have a personal carbon credit score. So, and this is horrendous. I don't want this, but at some point in the future, every one of us will have a carbon allowance. And once you go beyond that carbon allowance, you're going to get taxed up the yin yang, etc. Now, how do you do that? The only way you can do it is if you tokenize it. So it will be a form of NFT. And the only way that they can track that is by us, the humans, using things which are already tracked. So a lot of the supply chain for food, fuel, cars, the things that we already use, they're already starting to be tokenized. So, you know, to reduce the amount of air miles of the avocado that's flown across the world to your plate or whatever. And so in the future, if you go to Pret and order your avocado sandwich or whatever, the air miles of that sandwich will already be tracked somewhere on some sort of DLT. The moment you buy it with your CBDC, your central bank digital currency, it will be flagged up that, you know, Siam is now eating a dreadful avocado. We're going to add X amount of carbon points to his ledger. And all of a sudden, you're going to have a completely secondary market of people buying carbon credit allowances. So it is rather scary. And the thing is, NFTs is the future of freaking everything, in a good way with, you know, if we tokenize assets, but also in a rather dystopian way, because they're going to force, I mean, just look at what's happening with these 15-minute cities. Like, are you familiar with? No. Oh man, it's all over the world. Oxford's the first pilot program in the UK. Basically, they want to chop up cities into districts. So take Oxford, and they're going ahead with this, even though they are still having fierce backlash. They're chopping Oxford up into 6 different districts. And every year, and basically once it's done, and they're putting these traffic filters in, so it basically tracks the flow between districts, and eventually it's going to hinder or stop. So there's automatic number plate recognition all over the place that's being set up, and you will not be allowed to drive in between districts. So you have to apply to the council. And by the way, this is actually happening. This is not conspiracy thing. Just Google it. Just read into it. So you have to apply to the local council for a driving permit, and you're allowed 3 cars per household, and you're allowed to transit districts up to 100 times per year. So it's a couple of times a week. And they say you can apply. You know, at some point they're going to be like, no, because your carbon allowance is too high or whatever. And there's loads of backlash for very good reasons. Like, what if, you know, my job's on the other side of Oxford? Like, and they're saying you just use the dual carriageway. But the scientists already added it up. Like, it's actually going to add way more emissions to the world with people going all the way around the houses just to get to where you're going. So way more, you know, fuel usage, and also the time taken for journeys. And so that really does tie in with CBDC. So you know, Brit Pound, whatever they're going to call it, Digi Pound, and it's actually happening. And the crazy thing is, I don't know how to stop it, but no matter how dreadful it goes, they will say it's a raging success. We're going to do it with every city, and then you're screwed. And this is where, you know, people like, you know, that could afford to just not move into the city will go, right, screw this, we're moving into the countryside. But they're already starting to talk about a countryside tax, because living in the countryside is polluting the countryside. And they're even talking about fires. Like if you have an open fire, coming out of the chimney, that's bad. It's like, yeah. So ultimately, it all comes back to tokenization, because that's how they're going to track us as well as liberate us.
So the pros and cons of NFT.
Yeah. And now let's all slit our wrists. Let's go and grab a beer.
I'm sure we're going to have a moonshot. No, it's fascinating. It's fascinating. I think this really sort of fits with, I like to think that a consistent message from this is be curious. And if that's not enough to jump on Google and just find out a little bit more, then, there's stuff here that's got to
exactly. Well, look, one of the most dangerous things you can do is sit in your own echo chamber, right?
Correct.
And with everything in life, there's going to be opportunities and challenges that it presents. So a thoroughly insightful chat, Simon. Thank you ever so much, my friend. Hopefully we'll be able to bring you back as a guest.
Yes.
But no, ladies and gentlemen, thank you ever so much for listening. Thank you, Matt, as always. And we'll see you all next time. As always, don't forget to like, share, follow, subscribe. And ladies and gents, to the moon.